Oh, today we were expecting a little bounce by the market, but man, did we get a full-fledged short squeeze today? I mean, market the last hour of the market, the SPY went from 300 to 308, just absolute squeezing action. I think we'll probably see a lot of resistance in this 315, 320 area, but I mean, you can tell you get so much information. Everyone's going nuts right now about the media and this coronavirus, and trying to sell their long-term accounts and all this. I'm hearing stories everywhere I go from not only you, all my friends who are advisors too. It's just like people are going nuts they're like sending emails. The funniest thing was subject line was market timing, and he sent them this when SPY was at 288. He's like, I think this is the time to get out of the market, and he just fucking marked the bottom. You're just seeing so much stuff like that. And I'm getting the question a lot of like, how do you know what to do in these times, and how do you react? And it really just comes down to, this is not the first time we've seen this type of thing. We get one of these moves pretty much annually in the SPY. The first time I ever saw it, 7-8 years ago, I was like, oh god, the market's going to zero, all this stuff. And then you start to see the same patterns over and over again, and that's what we got today, and that's why we were so ready to buy this market today. But what do you got? I'm sure you have more details.
Yeah, I have a few like your buddies. I have a couple of funny stories too, and I'm not going to go into a lot of them, but all of it relates to people who, on the run up, they're waiting for this correction. They cannot wait to get in, and then once they're given that opportunity for it, they want to do the complete opposite. Right. I had a guy the other day who wanted to cash out his 401k and buy stocks that sold helium because there was going to be a balloon short. It's like the level of just insanity and just stupidity that is out there is it's insane. But just one thing on this virus, and Shaky, if you could pull up that image on the epidemics, going back to the 80s, over the last 12 major epidemics that have gone on that has scared the market, the last 11 of them that have occurred, 6 months later the market was higher. 12 months later, the market was higher. In all of these instances, the average return 6 months from now is about 8%, and a year from now it's about 14%. So when everyone's trying to sell at 284 or 288, like marking that low, you were selling at the absolute worst time humanly possible, than to wait to get back in later when you're only going to be buying back at higher prices. So for the guy with the 401k or the IRA, you really shouldn't be doing much, especially if you don't know what you're doing. If you're trading, there's going to be opportunities. My 2 main ideas for this week ripped today, so it's like you can't really. There's like if you weren't already in, there's not much you can do, other than just kind of wait for things to calm down. And there's one other chart that is also pretty helpful. It's the reasons to sell image. Again, very major. Other than epidemics, just the market crash, the flash crash, gold, all these other major headline driven events that had occurred in the last decade. If you look at the chart, if you forgot about all of them, you crushed it. You could not have done better. So people try reasoning it out of the market, and when they want to find those reasons, they'll use the exact reason, do the exact opposite, and get in and buy more. So again, hopefully, once you start educating yourself, you won't get as nervous. Again, for me or Shake, we've been doing this for quite a while. It does. Like I could absolutely care less about this kind of stuff, because in 3 or 6 months, it's going to be the next thing, where all last year was rate cuts and the trade war. Now it's this flu, and then in 6 months, it'll be the next thing. So just try not to do irrational things when everyone else wants to do the same thing.
I got a funny text. I got a funny text about 2 minutes ago. They said, and it's one of the people who fucking got out of so much stock, and he says, I swear to God, if we V-bottom and we're at highs next week, I'm never putting on CNBC again in my fucking life. But that's everyone is so reactive to news, and the news is so good at fear mongering because that's what sells. Like I bet CNBC ratings are fucking flying this week because of coronavirus. It's like you just take the big picture approach and
even with
go on.
And even if we look at last year, like we talk about how these charts repeat themselves. They show up very often. They come up again and again and again. And last year, we were going into 2018 was this same exact market. We were running up into all new time highs for all 2017, new highs, new highs, new highs. And then going into the end of the year, we had this crazy, kind of parabolic run. And then we had that first correction, and we dropped, 12%. And literally, it was the same month, like within days. And again, same thing. We had this crazy grind up all year into the end of the year. The last 2 weeks, so we kind of had that parabolic run that we saw a little bit more like the NASDAQ sector. And then this correction comes. Again, no one saw this coming. We weren't calling for a correction. No one else was. It's here now. And now we're pretty much past it. We pretty much negated half the move. If you just forgot about the market for a week, you wouldn't really even know what's going on. Most of the stocks have kind of reset themselves.
I don't think we're out of the woods yet by any means, though. I think we could have another update tomorrow and then just run right into that previous support area, which now might act as resistance on the way up. So I don't think we're out of the woods yet. I just think there's just massive overreaction to this news, as I'm sure you do.
Yeah. No, of course. Like there's without a doubt, we can see us roll back over to those. The one good opportunity though is when we get these sharp bounces off these lows. Is if say you were trapped in something that you did not want to be in, and you wait for that bounce, like we're getting these last 2 days and maybe into tomorrow. Say you were trapped in a stock at say 100 and it drops down to 90, and it rips back up to say 95 or even 98. These are those chances where if you had made a mistake, you're kind of given a chance to get out of that mistake for a much less consequential loss than it would have been 2 days ago, panning into lows. So this is sometimes a time where you can kind of clean up things that you weren't in love with, where if we do roll back over, then you're in cash and you don't care.
And for me, I mean, I got the opportunity to buy some Amazon. I missed this entire Amazon run. Now I can limp in when it falls 15% in like 2 days and has these crazy numbers. In a year now, I'm sitting on some good Amazon stock. I'm pretty pumped about. I was able to get in on this dip. And now I'm sure there are so many other sides of the coin that are like, oh, panicking out of stock when, if you have that, year outlook as the chart shows, the epidemic chart we're looking at, just like how overblown this shit gets and how